Hello, everyone. My name is Deepak, and I am a tax code advisor. Once again, I'm back here with you guys to share some of the latest information that is happening in the markets right now. So, I'll give you some tax updates, I'll give you some real estate related updates, as well as some financial updates, hoping that all of this information can help you make a lot more better financial decisions. Now, one thing I do want to state as a disclaimer is that you should not rely on anything that I say because I collect this information online. I make notes as this information becomes available to me. So there is a slight chance that that might be not accurate, or perhaps I'm reading it wrong and I might misrepresent the data. So I want to make sure that everybody understand that nothing in this podcast should be considered an investment advice. Before making any kind of move, you should really do your own research and figure out if that's the right thing for you to do or not. So now that we get that out of the way, let's get started and let's take a look at what is happening in our markets right now. Okay, so first thing that is happening in the market right now is at this point, we do know what our tax brackets look like for the year 2025. So let's take a look at. So IRS has released the numbers at this point. As we can see that if you're, married filing jointly, if you're making less than $23,200 a year, that means you are going to fall into 10% tax bracket. Versus 23 to 94,000 you're in 12%, and 94 to 201,000 you are in 22% tax bracket, and 201 to 383 900, so almost 384, you're in 24% tax bracket. I think that's where most of my clients fall in, so I'll kind of stick with that number right now. Is That's the number that we need to be really paying attention to. So normally when we're doing tax planning, we take a look at that how we can keep you in a lower tax bracket. So, for example, if you're in 205, 210, 220, 250 price range, then we need to implement some strategies to bring you back down to 22% tax bracket instead of being 24%. And once again, if you are hitting 400 or 450, somewhere around that, then we need to look at how we can reduce some of that taxable income and bring you down into 24% tax bracket. As we can see, the major differences between 24 to 32. This can have a good impact. One thing that people often mistake is they assume that if they are in $383,000 or more, they're going to be end up in 32% tax bracket. That is just simply not true. What happens is your first income, that means your first $10,000 is being taxed at 23,000, at 10% rate. And then 23 to 94, you're being taxed at 12%. And from 94 to 201, you're being taxed at 22%. So although these strategies are good, that we should reduce your taxable income if we can, but it's not as significant of a difference as a lot of people think, because we are paying extra taxes as our income grows. So IRS is giving us incentive for growing an income. So that's one thing we should definitely pay attention to that. And let's see. Other than that, I mean, this is an election year, so obviously all the candidates are making big news about what they are planning on doing for taxation. But I think very recently Trump made some statements, and I want to talk about those as well because they're so last minute. Seems almost like a last push for his campaign, but I think they are important, especially for our community. So Trump recently made three new promises in addition to all the things that he has spoke about in the past. But these three are very interesting because they are relevant to Americans, and they could be seen at the last minute election push. But either way, I think we should know about those. Number one, he said that he would like to eliminate double taxation for Americans living abroad. Now, this is interesting because this might make you ask yourself a question: what is Trump trying to do 5 years, 10 years from down the road? Is he setting up something for himself? Does he have a long-term planning that is in play here? Uh, but kind of interesting that he's talking about that, right? So currently, US citizens living abroad must pay income taxes both to their host country as well as to the US. That means you're almost deal with double taxation problem. Now, the income threshold for double taxation is about 126,500. So if you're making more than $126,000 in a foreign country, that's when this double taxation kick in. If it's less than that, you're only paying taxes in your host country. So it's not as big of a problem as you think. However, one thing I do want to mention is that right now, as of 2024, the most recent data we have suggests that roughly 5.4 million Americans are living overseas, probably in Canada, Mexico, in Asia, and other places. So 5.4 million people. Now, if you're living abroad, maybe you don't really have a whole lot to do with US politics. Maybe Trump is thinking about attracting that vote bank. So let me know what you guys think about that policy, if that will benefit you or that might hurt you. But especially for the Indian community, many people always talk about that they want to go back to India after they retire. So maybe they will see this policy in their favor. Second thing he talked about was making an auto loan interest fully deductible. This is an interesting one because on one side, we are pushing people for EVs, especially in California. And then we are putting some ban on technology to extract oil and gas, which is very interesting. And here Trump comes out and he said, look, I am going to give you a full, 100% um, tax deduction for any auto loan interest payment, uh, which is interesting because if you think about it, what's the average price of a car? I was happened to be in a showroom yesterday, and I was looking at Honda Odyssey, which was running almost about $55,000. And then we looked at some Caddy and Range Rover and stuff like that. They were a little bit more expensive, but I think the average price of a new car in America is roughly about 49,000, maybe $50,000. Almost 100 million Americans take auto loan. So if you think about it, that is attracting a lot of voters who are thinking about, what can candidates do to help me? And I think this policy can indeed help a lot of people. If people are able to save some money, if somebody's paying, let's say, $5,000, $10,000 for an average car, and they can, and if they're in, let's say, 20%, 22% tax bracket, that could be a saving of a couple $1,000s for them, and they can use that saving to, buy food, maybe, buy something else that they might need. So not a bad idea. It will also help the auto industry that is currently facing some threat from foreign countries, as we know, and it will definitely help them out for sure. But now the question you want to ask is, what about all the rich people? What about the people who don't buy a $50,000 car? What about people who buy a $100,000 car or a $200,000 car? What about those people? Is that policy will help them? Absolutely. But one thing I do want to point out is a lot of people who own those expensive cars, they usually have business and they're buying those cars under their business. That way they're automatically getting a deduction anyway. So it's not something new. So I don't think it's going to help out a lot of rich people, although yes, some people will benefit out of it. But I think it will help a lot of regular people. So I don't know if that makes a decision that makes any difference in the which way you vote, but that is something that he's pushing for. Lastly, I think both administrations, both Democrats as well as Republicans, are talking about putting more tariffs on Mexican auto imports. So one of the biggest competition right now for Tesla is BYD. As we know that BYD is able to make cheaper cars and then able to make those available to, people at significantly less cost. I think last time I checked, Model Y was available for like $10,000, $12,000 compared to Model Y that is available for almost $50,000 before all the credits and savings in the United States. So it does make a big difference for people. I mean, 10,000 versus $50,000. So how is China trying to avoid all these imports? Well, instead of importing directly to United States, they are using other countries, and they're, for example, right now they are setting up plants in Mexico, and that way they're going to manufacture the cars in Mexico and then bring them to the United States. So to discourage that, and obviously they're not specifically talking about China, but sounds like that's where the policy is is heading to, is that they are going to increase tariffs even more than 200% for auto that is going to get imported from Mexico. So obviously not good for Mexicans if that happened, but still I think Mexico itself has a lot of demand for cars and will definitely help their industry, but I don't think they will be able to import in the United States. Now the American auto industry employs almost 4.5 million Americans. So you can imagine if China were able to produce cars in the United States for $10,000, $12,000, or that will be a big hit for these American jobs. So at the end of the day, Politicians are trying to save those jobs, and they've been doing that for quite some time. So it was kind of interesting to me that Trump came up with all these policies at the last minute. But anyhow, those were some updates. I just wanted to share those with you. But I mean, the real question I think people are should be asking right now is, what difference does it make who wins in the election? Does it really have a major impact on real estate or our financial markets? Does it make any difference? Well, historical data shows that market often trends up regardless of who wins the election. So yeah, sometime, for example, we have seen downturns, but that was because of our economy, not so much because of president. No matter who wins the election, I think they are going to stay focused on continue to grow America. So I don't think it's going to make a whole lot of difference from financial markets. But I think especially during this week when election is only 5 days away, I think people are a little bit worried about which way it goes, and half the Americans feel like if other half win, then things are really going to be bad. Um, so anyhow, it doesn't really make a difference. My suggestion to my clients always is to look at a longer term picture. S&P 500 companies have demonstrated resilience and growth over a long period of time. So I don't think our industries are going anywhere. I think over the long term we'll be just fine as long as we think about a long term horizon and we consistently invest. I think we'll be just fine. So, on that topic, we have a Wealth Summit coming up on November 10th. So, right after the election, please, if you have not registered for that, please do register. And I'm looking forward to sharing so much interesting stats, so much interesting data with you that you're going to be surprised at the Wealth Summit. So, please don't forget to register for that. Okay, let's see what else is new. We do expect Feds to do another rate cut, and market is expecting at least 25 basis point rate cut um, next week. Why? Is it because of election? Is it because of who is running for the race? I don't think so. I think the reason behind that is we just did a rate cut, and it doesn't make sense to just kind of stop. I think obviously Feds are seeing some sort of risk and they want to make sure that they continue to do some rate cuts so that way it looks like things are under control. So I think we will see that. Um, you know, I think by the end of 2025, market is projecting that Fed rate will come down to 3.5, and I thought that's important to know because a lot of people been keep asking that are we going to go back to the way we were a couple of years ago by 2025. So I don't think that is going to happen. I don't think we're going to go back down to 0% interest rate. That just doesn't really make any sense. Um, should they be doing rate cut? So this is an interesting one because half the people in financial market think they should have done it a lot earlier. Other half think that they should have waited a little bit longer. I mean, what's the rush? The banks are not failing. Our stock market is all time high. Our real estate is all time high. Nothing is really breaking. Unemployment is still under control. Inflation is starting to go down. So why the rate cut? So kind of interesting, uh, but we'll see how it goes. One thing to do keep in mind is that despite high inflation, um, things are still strong. We've been talking about inflation is coming down, inflation been coming down, but people are feeling the pain of inflation. And I'll show you some data just in a second here in terms of income growth and in terms of real estate and whatnot, because I think all of that matters when it comes down to inflation. The annual inflation since 2020, so that means I'm talking about since in last 5 years, has averaged roughly 4.2%. And if you do the math, 4.2%, and if we do the annualized compounding on that for the last 5 years, that means you should be making roughly about 23, 24% more per year than what you were making in 2020. So let's do a simple math. Let's say if you were making $100,000 back in 2020, you should be making $124,000 or more in 2024. And that's just an average. In Bay Area, that number might be even higher. So because inflation is probably going to be a lot higher in Bay Area than in the other parts of the market. So if you are in California and you are not seeing an income growth of at least 24, 25% in the last 5 years, that means you're making less money right now than you were in 2020. So let me take a look at some of those numbers and let me share those. So I'm going to share a few different markets real quick so that way you can get an idea about how the income is doing right now. So if right now, let's take a look at Texas first, and then I'll take a look at California. If some of you guys are in a different area and you want to know about your market, you can definitely reach out to me. I'll be happy to help. But if I take a look at, for example, this is the Austin market right now. And in Austin market, we have a downtown, but then there are some major cities. That's where a lot of people are moving. So, for example, this Taylor area, this is where the new Samsung factory is at. This is Leander, Cedar Park. Those are the two major areas. This area right here, this is a major hub for Indian community right here, Abbey Ranch, and this Round Rock area. So if you're thinking about, this area, this is more than likely this is the area that you're interested in, and this is our hill country right now. So people who like some hilly areas, nice views, this is the area they live in. So if we take a look at, for example, right here, Abbey Ranch area, people are making almost $145,000 here, versus if we, people in the hilly area, people are even earning more, almost $184,000. And I'm going to, show these numbers for California as well, so that way you can kind of compare as to what's happening there. You can see in the Bee Cave is $167,000, and in Leander it's 132. And why that is important is because people often think that things are way better in California, but not always. So let me compare this real quick with let's see, with let's do Fremont, for example. Okay, and we can take a look at that area for a second here. Pull that up. Okay, so now we got the Fremont area. I'm going to zoom out a little bit so we see it a little bit better for different areas. So we can see in Fremont, 94538, the income is $152,000. So, and that was the reason I wanted to compare this with you. So you can see how different this is compared to, for example, Austin, 94536, 161. When you go into 94539, income jumps quite a bit, you know. Um, $233,000. So this is, if you're looking for some higher income, you really want to be in this Mission San Jose district. But the other areas, even Union City, for example, we take a look at it, 146. So you can see that these areas are not too far off from Austin. Makes no difference, right? So kind of gives you a Pleasanton. This area is growing, 198,000. Dublin is 202,000. Center One is 215. So 150 to 200 seems to be the average in this area. Let me also pull up a little bit of a Dallas market for you. So this will kind of give you an idea as to how Dallas is doing, because a lot of people I know are trying to move in Dallas. So you can see Dallas is not as hot as Austin is. So we can see some of these major areas is 102, 92, 122 right here. Um, so it kind of gives you an idea. Dallas is at least not as bad as Austin, but Austin is almost very similar to Bay Area now. So just wanted to kind of show you what's happening with the income. But more importantly, what I wanted to share with you was income growth in this area. So if we take a look at these numbers right here from last year, you can see how the income growth has been happening. Like 75214, a lot of income growth, 75228, 40%, 30%, 35%, 24%, 20%. Let me go back to that Austin market for you, so kind of see that area right here. This Cedar Park area, 20% almost. So looks like Austin, Leander, 31%. And if I go back to our San Francisco Bay Area, or let's go back to Fremont to be more, I think we can get a lot more better data in that area right here. And if I look at that area, um, if I take a look at income growth, people are realizing, look at this, people have gone 32%, 35%, 30% on average. In this area, 50%. So the truth is, people are making more money compared to inflation. So what I said earlier was that you should be making roughly about 24%. So if we see on average, unless you're in Hayward, if you're in Hayward, you're losing money, basically. People in Hayward are losing money compared to what it was 5 years ago. If I take a look at San Lorenzo, people are losing money. 94579. But well, actually take that back. San Leandro, people are making good money. So this area 94586, people are making 50% more money than they were back in 2019. So in 5 years, um, people are making a lot of money. So inflation hasn't really been hurting anyone. Okay, a couple other things we should really talk about is unemployment. So right now, unemployment is sitting at roughly 4%, 4.1%. The historical average for unemployment is usually 5.7%. So we are doing pretty good, and that's what I said. That's why one of the reasons why there should be no hurry to decrease the interest rates. But obviously, Feds have already taken that decision, and I think they're going to continue to follow that path. But I don't see any major downturn in unemployment right now. Um, so we'll see how that goes. Another thing that we should really talk about is the national debt, and especially during the election time, because that is always coming up. I think the last time I was attending a meeting, somebody was talking about deficit. Deficit has been actually coming down every single year. I think Biden administration has done a decent job of decreasing the deficit. But the bigger problem is our U.S. debt. The national debt has increased by 56% in the last 5 years. So we're sitting at $36 trillion. I mean, this is a major problem. I mean, just do the math. I think we're adding maybe a couple of $1 trillion in debt every couple months, if not more. Um, I mean, that's a big problem. I mean, how do you pay that money back? So I think that should be a concern. But interestingly, no candidate is really talking about that right now. And I think people need to figure that out. If we take a look at taxes, for example, in the last 10 years, tax revenue has increased by roughly 63%. So you would think if your income has increased by 63%, your expenses should have increased by 63%. But that is not the case. Our expenses as a nation has increased to 93%. So we are earning 63% more and we are spending 93%. So not a good balance. I think we need to figure out how are we going to deal with that problem. I don't think we're going to solve that in the next 5 days, but I think overall politicians really do need to figure out how they can establish trust in public and deal with those problems. So important. Okay, lastly, I want to talk about some opportunities right now. Where do I see there are some opportunities where we can make some good money? So I want to share some of those ideas with you, but I'm thinking maybe I should do that in a separate video. It will be part two of the same video, just so this video doesn't get any longer. I think it's already 20 minutes, and I don't like to make videos that are more than 20 minutes. That's my like magic number. So I'm going to stop this here, and I'll create a part two of this continuation of this where I'll talk about the opportunity. So do watch that video as well, and please don't forget to register for Wealth Summit. We are only 10 days away. It's on November 10th at in Newark, California. It's going to be a big event, major event. I think we have maybe about 50 tickets available out of 550 tickets, so only few left. So please do register for it. And I'll look forward to seeing you at the Wealth Summit. I hope you enjoy the content. If I'm doing a bad job or if I should change something, I should add more data or I should do it differently, I want to get your feedback. I want to hear from you guys. Please let me know. Okay. Thank you.